Hey guys, welcome back. It's John Hunter, Guaranteed Rate. This week's video, I want to talk about how much house can you afford from a lender's perspective. So really, it comes down to debt to income ratio. A lot of people have heard it before, but really, how do lenders calculate it? What do we look at? What are the limits? The rule of thumb is a good number to remember is 50%. But 50% of what? So what we do is how we calculate income. Really, the down and dirty of it is, if you're hourly, we're just going to do 40 hours a week, 52 weeks a year, divided by 12. If it's overtime, tip, commission, we're going to take a 2-year average in most cases. Sometimes we can do 12 months, but most cases it's 24 months. If you're self-employed, it's a 2-year average. Unless you've been self-employed for over 5 years, then very often we can get away with a 1-year average. So, or just use last year's tax return. So that's the skinny on income. So really what we want to have for income is it's a gross number. It's before taxes. We don't care what you bring home. It's about what you get paid before taxes, because everybody's tax liability can be a little different, and it's not really fair to go off of take-home pay. So what we do is, let's say you make $10,000 a month, right? So the max we're going to do in most cases is 50% of your before tax income. Now, there are exceptions to that rule. VA will consistently go higher than that, and FHA will too sometimes. But on most conventional loans, even FHA, you're looking at a 50% limit. So that has to include your debt, though. So we're talking child support, we're talking tax payments, we're talking credit cards, car payments, any type of debt, right? Utilities don't count, insurance doesn't count, water bills, nothing like that counts. It's just what you're paying to consumer debt for the most part. So alimony, we actually deduct that from income in most cases. We don't add that as a debt, which actually helps out a lot of times. And child support is also a debt. So anyway, we subtract that from the total of 50%, and then that payment is what we're going to pre-approve you for. So pre-approval is kind of a misunderstanding. We don't pre-approve people necessarily for a dollar amount. We will pre-approve you for a payment. So, you could look at 3 different homes, and if the taxes and homeowners dues, things like that come out differently, you may qualify for one $300,000 house, but not the next, because it changes the payment. So it's all about the payment for us. And that goes the other direction as well. So we're going to look at that payment. So then you can kind of back it out based on how much money you have down, what the type of loan, interest rate. Then that's how we back it out, and we'll figure out, here's what you can afford. I tell people very often, it's kind of a range. You're going to qualify for, 650 to 675, depending on the house, and then of course, if you're pushing the envelope, we kind of look at them individually and make sure the taxes don't come out, too high, or there's some other funky situation that goes along with it. So that kind of gives you like a skinny on it. There are exceptions to the rule, just like everything in life, right? There's exceptions to these rules, and we can be more flexible, say like with VA. One caveat to that is the 50% rule is a total debt, right? But when we look at debt to income ratio, there's 2 numbers we look at. There's a housing ratio and a total debt to income ratio. So the housing ratio is just the mortgage payment divided by your gross monthly income. And so that number typically cannot be more than 47%. So, if you have no debt, going to 50% can be a problem on some loans. FHA, it's a problem. VA, it's not. They don't care. VA is super flexible. But on most conventional loans and FHA, 47% of your gross is the max payment if you don't have any debt. So that's also a good number to remember. So if you ever want to figure out what your payment would be, what the lender would approve you for, very often these numbers are way higher than people feel comfortable with. But these are the limits that we'll do as lenders, and what I do consistently for people when I'm trying to figure out what they qualify for. And in such an expensive market like ours, very often you're buying at the top end of the range. And the reality of it is sometimes, if there's a 2 household income, let's say somebody's credit is less than, and we can't use their income, 47% of one person's income may not be pushing the envelope on the household income, but we can't always use the whole household income. Or if somebody's a commissioned individual and they are killing it recently, but yet the 2-year average is lower, very often, pushing that envelope doesn't really break the bank. But as far as we're concerned, we're going to look at it a little bit more conservatively. So I really that hope that helps you guys out. You know, honestly, the message to really get from this is get pre-approved. Talk to a professional. You know, I'm here to help you out, to help figure it out, to actually quantify these numbers, to take the mystery out of it. You know, getting pre-approved, there is no substitute. You know, we have this wonderful program we're doing now. It's called Same Day Mortgage, where we fully underwrite files, get them out of the way, really, so you can make offers with little or no contingencies. I have a great success story I'm dealing with right now. We have somebody, we fully pre-approved them. They went in, made an offer, no contingencies. Actually, it was 2 days ago. This is Friday, July 21st. The offer was accepted on Wednesday. We actually are clear to close now, 2 days later on Tuesday. They're closing next week. 7 days is the quickest you can close by law, just based on the disclosure requirements. We're going to be ready. And this person made an offer, was aggressive, waived a bunch of contingencies because they felt comfortable with it. And here we are ready to close. The appraisal came in today. They got their offer for $100,000 less than what it appraised for. It's just an amazing story about being aggressive, doing the things the right way, getting pre-approved, going through that process, making that little bit of effort upfront can pay huge dividends in a competitive market like we're in. So, you know, feel free to reach out if you want to have that experience. It's great. It takes so much stress out of it. These people are leaving on their honeymoon. They're excited. It's zero stress. We're 2 days into the process and we're almost done. So that is the way to do it. It's a really good feel-good story versus, you know, waiting to the last second to get all this stuff done and really not knowing. So anyway, hopefully that helps you out determine what kind of home you can afford, what kind of payment you can afford. Feel free to reach out to me anytime. John Hunter, guaranteed rate, 206-856-4685. Have a wonderful weekend, and I will talk to you all soon. Thank you.